Welcome back everybody, your typical bull here, and today I'm going to teach you my other favorite trading strategy. But before we get into that, please remember to like, subscribe, and comment. 50% of you or more who are watching these videos are not subscribed, and all of my subscribers get a free Lambo, so I'm not really sure why you wouldn't do that. No, seriously though, your support is very much appreciated, and it does help the channel to grow, and this content takes a lot of time to put out, so I really do appreciate any support you guys give me. Alright, so first things first, let's reset up our charts here. We're going to be talking today about the break and retest strategy, or as I like to call it, the B&R strategy. So first things first, let's set up our charts. It's the very same as our SR rejection strategy. I use the 21, the 9, the 50, and the 200-day EMAs. So 21, 9, 50, 200-day EMAs. Check those. If you don't know how to set them up, you click this little indicators tab and this edit button. It'll take you right to this page that I'm looking at now. And then we're going to need our MACD. We'll leave it standard 12, 26, and 9. Colors are whatever you like. I leave them as default. RSI, we are going to be using the standard 14-day RSI, and the stochastic once again with inputs at 5, 3, and 3. And that's all we're going to need as far as indicators go. And I'm going to resize these so that I can make the price action a little bit bigger. And that looks pretty good. Okay, so once again, we are going to start on our weekly chart and work our way down to whatever time frame that we are trading. And we're going to be marking these zones. So if you missed the lesson on zones, please you go back and watch that. I'll put a link in the description. So since I trade the daily and the hourly time frames, I'm going to start here on this weekly time frame. And the only thing I really want to mark on this weekly chart are levels that are very current. So here looks like a really strong support level for Facebook. And I'm just going to go ahead and mark that. I'm going to color that green as a support. And you can do these colors whatever way makes you happy. Like maybe you want to use a different color for each time frame. Maybe you want to use a different color for your supports and resistances. It doesn't really matter. It's just whatever you are comfortable with. And then once again, this looks like a good one. And the reason for that is likely, I'm sorry, I didn't mean to make it that big. Is that the reason I'm marking this level here is because it rejects here pretty strongly, as you can see, and then it rejects again here fairly strongly, and then it's testing here again as support, and it moves up very strongly from that level after it's broken. So, and that's all I'm going to mark on this weekly chart. Now let's move down to our daily chart. I'm sorry, my service is just a bit wonky. Oh well, our daily levels are pretty much the exact same as what we want to look at for our support and resistance levels. So the breakout strategy here, I'm going to go ahead and mark this top. It's slightly different than the retest and rejection strategy, right? So with our retest strategy, we're looking for things trading in this range, and we buy at support and we sell at resistance. With our breakout strategy, there's two ways to go about trading this. Let me go ahead and delete that and make it a little bigger. So there's two ways to go about trading this. Your stock's moving this way. What we're looking for now in this specific setup is prices to move either out of this on to the upside, which would be a breakout to the upside, And I like to wait until price comes back and retests that level as support. And then instead of buying here, I'll buy here as that support is respected and expect the move to continue up. And the other way to trade this is obviously just to buy here on this first breakout. But then we're also looking for prices to break down in the same fashion. You can either buy it on the initial break, but personally I like to wait until it retests and then buy it as it respects that level as a resistance. So let's look at some stuff on some charts, and then we'll go over the indicators. So first up, this is a resistance level here that we've already marked on our weekly chart, and we know that we marked that on our weekly chart because we just did it, and that's a very strong level, right? Alright, so what happens here? Price is respecting this level here, here it's respecting, here it's respecting, and you would be trading this according to the other strategy we've already went through to the downside. Then that price breaks out here. You see this candle breaks out, and then it moves back down into that level, retests, and then it starts to move higher. What you want to do at this point is once it starts that move higher, you buy in right there. And obviously here you have a very nice little gap that you use your stop loss as there, and then of course you target 2 times away. So what we're looking for, MACD bullish, RSI in an uptrend, stochastic in an uptrend, and all of those things are aligned, and that's perfect. And then we're looking for our 2 and 3 candle or single candle reversal patterns in the forms of pin bars, and this can be red or green, it doesn't matter, or our V-shaped candle patterns, so price moving down, and then this is the start of the pattern, and then you get that confirmation candle which completes the patterns. So that's what we're looking for. We're going to go over a whole bunch of examples with a whole bunch of different stocks, and in our next video we'll go over how you can scan for these setups. So here's one. Once again, price breaks out. Here is your breakout. Then it comes down, retests, buy, stop losses, exits 2 times away. And then once again you go back into looking for your SR rejections. Cool. Alright, so let's go look at some more examples. Respecting here, and this is all respecting. And then here again, here's another breakout. Price is rejecting here as resistance, and then it breaks above that level, right? And then it retraces down towards that level again. It doesn't quite test all the way down, but I would take this simply because MACD's bullish, RSI's bullish, stochastic's bullish, and on, if you look down, straight down from here, stochastic's bullish here also. So on that retest, you buy targets. Let me delete all these drawings to make it a little cleaner. You're going to want to get in probably right around there. Stop losses right around there, and then targets around 2 times away. Oh, and then we'll see. I want to mark our target and our stop loss with a line here so that I can scroll through and we'll see what happens, right? So we would end up getting in right around there. And then our stop losses just below that pattern there, and then targets roughly 2 times that are about there. So that looks pretty good. And of course that would probably, that would stop out. I know that would be a break-even trade because if you notice you get your 1 times risk here, and then you move your stops to break even as we talked about before. So we're going to go ahead and talk about that again in this lesson. This will avoid some of the false breakouts, right? So At this retest, where you buy in here, your stop loss is there. As this price moves up and it gets to 1 times your risk, right? You move your stops to break even. So at 1 times your risk, you move your stops to break even. Now you want to try and avoid moving these too early, just to get stopped out on regular volatility. So let me just draw a little thing. So let's say you are in a stock here, and it breaks out, retests, and you get in right where you're supposed to get in, right here. Your stop losses are there. So this is your, let me make this pin. This here is your 1 times risk. So as this price moves away from your 1 times risk, here, you move this stop loss up to here, break even. So now your trade is risk free. And then with these breakout trades, you can either target straight up 2 times away, or you can trail your stops to swing lows. And I'm sure we'll find some examples where we can go over that as well. And then once again, if you trade this level again the second time, you will notice that it is respected here. And that's a huge price target that you hit very nicely on a huge gap up the next day. Cool. So let's scroll through some other things and see if we can find some more examples. Let's go look at AMD. I've already got some zones marked here, but let's go mark some other ones. Let's look at our weekly chart. Weekly chart of AMD. Scroll through, and I'm just going to mark some of these weekly levels with horizontal lines. There's a major price level. And then here is the breakout from the major price level. All right. That'd probably look a lot better on a daily chart. So here's some major price levels. Actually, I'm going to mark this with a box. Major price levels here on the weekly. Major price levels here on the weekly. And then here's another one. Oh, crap, I lost one. There it is. Once again, you have some major price levels here. This may look a little crappy when I end up getting through here. Down to the daily chart, here's some major price levels here. Alright, so now let's scroll down to our daily chart and see what that looks like. And we're just going to go over a whole bunch of examples. Let me scroll super far back and see what we come up with. Alright, so right about here I think is where we started drawing. Yeah, so you'll see here that this level is functioning as support. And here's a short trade. It breaks down from that support, comes back and retests towards the support. And this doesn't have to be perfect, but as it moves back down on your daily chart, your stochastic, you get your cross down actually right there on your MACD. That's a very bearish signal. Your RSI is at the top of this register and it's moving down. Your stochastic is also at the top, moving down. So let me just zoom in on that chart level there. So price moves back up and it's rejecting from this level here. So you would end up getting in probably right about there, and stops would go probably, I would probably put them there, honestly. My stop loss would be here. And just due to the nature of how risky these short trades are, I only ever take 2 times risk for these and exit. You can trade these with options, and we'll get into that later on the channel, and that will reduce your overnight short risk to a fixed amount. But we're going to just continue going over this stuff with stocks for now. Alright, so now we're looking again for these major price levels. I'm going to move this down just a bit. So our zone we would end up marking would be right around here for this specific set of price action. Price rejects there several times. 1, 2, 3, 4 times price is rejected there. So it's probably a fairly good indication that that's a very strong level. So when price breaks through that strong level, what we can expect is that it'll hold it as a very strong support. So here we go. Here's your breakout. Price breaks that level here. And you can trade this, but know that a lot of times these breakouts fail. So if you wanted to trade these breakouts just as they are, you can get in here, put your stop just below the breakout candle, and then target 2 times away. And in this case, you would win. Your MACD's bullish, looks good. RSI is bullish, looks good. Stochastic is bullish, looks good. So you could trade this breakout just straight off of the breakout. You would be trading into strength. But like I said, I like to wait for price to come down and retest those levels like it does here. So price is down and it retests those levels. See here, it comes down, and then if you zoom in, you've got MACD's crossing up, your RSI is oversold, going back to its levels, your stochastic's making an uptrend, 3 check marks there, and then you get your V-shaped reversal pattern here. Get in right there, stops right there, and then if you were going to trail these, right? So you could set your initial targets way up here at this previous high, and then just as price moves up, see this first red candle swings down, stop loss 1 ATR below that. And if you're not familiar with the ATR, let me just go ahead and explain it really quick. The average true range is an indicator, and it basically just tells you the average expected move for a stock within one candle. So this one is currently at 37. So just make sure your stop loss is about 37 cents, at least a little more. So the rule of thumb is anywhere between 1 and 1.5 times ATR. So, right, so here's your entry, and then as price moves up, you move your stop loss to these swing lows. So your stop loss is here. Price moves up here again, and then you get that pullback, swing low, move your stop loss again to that swing low. And price moves up again, swing, and then you get another swing low here. So keep your stop loss and ATR away from that, and you may get stopped out here, but if you don't, price moves back up again, stop loss moves up with it, price moves up again, and then swings down, stop loss moves up with it, and then price continues to move higher, and then at these swing lows, you just keep trailing that stop loss until eventually it moves down and you see it stopped out, and you make ridiculous amounts of money here, right? So I personally only trade like this sometimes in very, very strong trading markets. So the way that I handle this myself is, if I do want to trail a stop like that, like if I got in here, I would take half of my position off, so minus 50% at this 2 times risk, right? And then at that point, I move my initial stop loss to 1 ATR below my initial target. So this is 1 ATR below. So I move my stop loss 1 ATR below that 2 times risk level, which is here. And then I just followed the final 50% up with my trail as the price makes swing lows and moves up. And then eventually you gets stopped out at the last swing low. And sometimes you make a lot more money. Sometimes you give a little back. Either way, it's fine. Cool. So I hope that that helps a little bit as far as different ways that you can take your profits on trades like these. So let's keep scrolling through this AMD chart here and look for some more breakouts. So here's another major price level. See, here's a false breakout, and you would probably lose. And these are going to happen, but if you manage your capital, it's not an issue, right? So I actually see with these breakouts, another thing you want to look at is this volume. Notice that this volume is really flat, and then you get this spike here as price moves out. Volume is increasing, so that no move is sustainable without volume behind it. That's just given rule of thumb. So I would have taken this trade simply because of that volume spike. MACD does cross bullish. RSI looks bullish. This looks bullish. Let me get this ATR out of here. Cool. And then you do get this bullish pin bar off of that zone. You would probably get stopped out here. Yeah, as that fails, but that's fine. It's not a big deal. You're not going to win every trade. But then you go back into trading your rejections. Here's a good rejection. It's down. So you make your money back almost immediately after that. Here's a good support level. Right, I'm going to go ahead and mark that. There's my little draw tool again, box. Right, there's a good support level. Here's another example of a breakdown trade off of that support level. And a breakout trade from that support level. So things aren't going to stay in these boxes forever, right? It's just not going to happen. Eventually something's going to happen, some kind of news or something that's going to make them move outside of their normal range. And those are what we call breakouts. So here it breaks down, retest back, enter, 2 times, MACD is bearish, RSI is bearish, stochastic is bearish, good trade. And then here again it breaks up, retests, delete that, breaks out here, retests, there, entries, stop losses, and then you could take off 50% here, and then stop moves to this location, and then on this trail up there's a swing low. I would probably move it to the bottom of this gap, and then you end up getting stopped out here. So at your breakout, MACD is bullish, RSI is bullish, stochastic is bullish. So all of those things are in a line, and that's good. Let's keep going and just look for a couple more examples. There's another breakout. So here is this level for the last several trading sessions. This is a strong support level. Our EMAs, we notice, are all moving down as well. Price crosses below this major area, which is at 200. Then price crosses below this major price support. Retests, moves lower. MACD is bearish. RSI is bearish. Stochastic is bearish. That's a good breakout trade. Alright, so I feel like that's probably enough examples, and you can trade this on any time frame the same as anything else. See, here it is on the 4-hour time frame. The breakouts pretty well look the same, right? So you get here, there's your breakout, retest, boom. So, all right, I hope this helps you guys. So please remember to like, subscribe, and comment, and we will see everyone in the next one. Cheers.